And I know times like this you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 18th of February 2024. I'll be doing the weekly market review, starting with the DXY. Here I'm viewing the monthly chart to give you more context about what I'm talking about. We have here the monthly fair value gap between this candle's low and this candle's high. Price retraced to this monthly fair value gap, and now we're walking inside of it. And now we walked our way down below that fair value gap. Now you can see that we've been in a consolidation in 2023. Last year, we've been in a consolidation. We took out the high, retraced to the fair value gap. So we took out the buy stops here. We walked inside the fair value gap, and then we started dropping lower. We dropped lower to the corresponding to that discount wick, have a retracement to the fair value gap, and now I'm expecting a continuation to the downside, attacking this sell side liquidity, and go lower for this fair value gap. This is what I'm looking at, and also I've also shared a weekly review at the beginning of this year talking about DXY and the objectives, the higher time frame outlook that I'm looking at, and I'm expecting on the higher time frame, the monthly fair value gap, the monthly time frame, excuse me. So you can refer back to the first weekly review of this year or the last weekly review of last year, and you can check it out how I outlined DXY on the higher time frame charts and what I'm expecting it by the end of the year. So this is a monthly chart. You can see how we retrace to the fair value gap. We walked inside the fair value gap. Now I'm expecting some kind of a continuation to the downside, some kind of a reversal here. And I'll show you why I'm expecting a reversal. You can see that we have a long premium wick here, and we took out the buy side liquidity. We've completely filled that weekly fair value gap, and we traded to the bearish order block here. So bearish order block completely filled the fair value gap, and we have a strong retracement to the downside, closing below the buy side liquidity or at the buy side liquidity. We have this long premium wick. We will be measuring the concentration of that premium wick, and we will be considering that and monitoring it on the low time frame, the daily time frame chart. And if we see price closes above that level on the daily time frame, then price can run up higher to take out the buy stops one more time and perhaps take out this buy side liquidity. Otherwise, if we see some resistance at that level, it would be telling me that we're likely to see lower prices. There's one more thing as a confirmation. There's an SMT here. I'll be showing it to you later on in the forex market pairs. But now, what's important here in this chart is the concentration to that premium wick. I'm monitoring that on the low time frame, and I want to see some kind of resistance at that level. Going to the daily time frame, you can see that we posted a three tries pattern: high, higher high, higher high, and this pattern was posted or was printed towards the buy side liquidity in that fair value gap. So this is what makes it stronger, that we formed a buy stops here, we took them, we formed the buy stops here and we took them. And while we're taking these buy stops and this buy stops, we were attacking another signature price action, which is other BD arrays. This old high, relative equal highs, we attack those relative equal highs. So it's not just a three-derived pattern where price is just printing high and taking it, getting a high and then taking it. No, it's creating those highs near a very important signatures in price action and very important price levels, which are that I've annotated here. This buy side liquidity, relative equal highs, and the fair value gap between this candle's low and this candle's high, and we attacked and we filled that weekly fair value gap, all of it, and just that small trading above that weekly fair value gap is just a mohawk to make sure that all of the trading, you can see that the bodies are closing within the weekly fair value gap, but only the wicks are doing the damage. They're making sure that smart money are in the markets going short. So this is the benefit, or this is the why the wicks will be doing this damage, to make sure that retail stops are being triggered and smart money or the money makers short positions are being in the markets, and they are in the markets going short. So they're just fulfilling their orders when they're printing those three drives pattern into the old important BD arrays in the past. So three BD arrays, three drives pattern into an important levels, and now I'm expecting some lower prices attacking the lows here, the relative equal lows here, and the low here. And as I mentioned at the beginning of the weekly review, the levels that I mentioned. And for more context, you can refer to the first weekly review of this year or the last weekly review of the last year to get more context and more understanding of what I'm expecting on the higher time frame outlook of DXY. So that's gonna be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see that ES has printed an outside candle. This is the first telltale sign that we're likely going to be seeing some consolidation around this area, and potentially we'll see a quarterly shift to the downside attacking this, or like it's a start it's a start of a sell program. So this is the first telltale sign to see an outside candle, and this is going to be pretty much it seen in most of the markets now, as you will see later on. This signature is being shown in the many of the markets that I'm going to be reviewing now. But you can see how price took out the buy stops, took out the sell stops. It took the sell stops with a few handles. You can go to your charts and you can check it out, but it was obviously lower than previous week's low. So an outside candle, now I'm expecting some kind of a consolidation, and then later we might see lower prices or at the beginning of a sell program. Going to the daily time frame, you can see we've been consolidating here. Fair value gap and the bullish order block here, the daily bullish order block. We retrace to the daily bullish order block and to the fair value gap, and then we retrace up higher. I'm expecting some kind of consolidation at that area, or we can potentially see some higher prices before we break down lower and start the sell program. So that's gonna be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. The same thing can be mentioned here. We have a outside candle where the high is higher than previous week's high and the low is lower than previous week's low. This means that smart money have finished their business up there. So they're just taking the buy stops and the sell stops now. Next week, we might walk inside this range between this candle's high and this candle's low, and we might be in a consolidation before we break up higher, take out the buy stops, and then break down lower and start a sell program. This is what I'm expecting now. We might consolidate a little bit. After we consolidate, we might take the buy stops that can potentially form here and then break down lower to make sure that all of the retail are being triggered long. And when they're triggered long, their sell stops are going to be residing just below the lows. This is where we're going to be driving price below these lows and then start the sell program to attack lower prices, reaching to this low. So that's what I'm expecting for the weekly time frame chart. The daily time frame chart, you can see that we have a bullish order block here, the two consecutive down close candles that traded to the favor gap, that took the sell stops. This is a bullish order block. Price has traded to the bullish order block. You can see that the bullish order block and the buy side liquidity, which is the all-time high, which is at the 17,706 and three quarters. That is the all-time high. Price is pretty much converging with the bullish order block level. So you can see that the opening price of that bullish order block, the two consecutive down close candles, have pretty much the same level as the buy side liquidity, which is the all-time high. Price have been trading at that level. We might see, as I mentioned, some consolidation between this low right there and this high before we break up higher, take out the buy stops, and then break down lower, forming the bearish breaker, and then potentially start a sell program to attack this low. That's what I'm expecting for NQ. Going to Dow. Here I'm viewing the weekly time frame chart, and I'm also viewing the continuous contract to get more data of the past. So as I mentioned earlier, we've already attacked the all-time high, and you can see this outside candle thing is just being shown on all of the indices that I'm just have reviewed. So we can see some kind of a consolidation here in Dow. As I mentioned last week and the week before, we can see some type of consolidation before breaking down lower and start a sell program. Going to the daily time frame, you can see it's pretty much just a consolidation. There's nothing to be mentioned here. When we have been driving and when I've been taking trades here and when I'm calling the markets going for long, attacking the all-time high, this is where I take trades. But when we reach to the higher time frame objectives, which is the all-time high, there's no reason for me to be in the markets. The market's not gonna be showing me the moves that I want to be in. This is not a high probability condition to be part of. So why bother be in these conditions when you could have just taken these trades and be in much ease conditions, like the trades that you're going to be taking in these environments between November and, let's say, the beginning of this year, is going to be way better than being or trading in this environment. I mean, you can look at it yourself. It's way more easier and way more better for you. It's going to be just going to be trading way more easier and faster when you're trading in these environments when compared to when compared to this environment. So you choose. I mean, of course, that is obvious. You can take some trades inside this condition. You can be scalping to the middle of the range. That is obvious. But personally, I'm not that type of guy who trades in these types of condition. I like to take and trades those portion of the the charts. I don't like to be stuck in this little consolidation. I'd rather be part of this move rather than trade in this small consolidation. Now, for some of you, you would want to be in this type of a consolidation, and this is where your model and your career would be built upon. Your career may be built upon this consolidation, so you can just sit on the sideline all this time when it was trading and spooling to the upside in the buy program, and when price started the consolidation, you could be trading your model inside that consolidation. This is up to you, but I'm telling you about myself that I'm not that type of a guy who trades in the consolidation. I like to take those trades that reaches or takes me to the high time frame objectives. And then when the high time frame objectives is met, I'll just be away from the market and I'll just enjoy my time, celebrate my wins, and just relax. When the market tell me or show me the intel, show me the information that it's likely gonna be reversing or start another quarterly shift that's gonna be lasting for 3 to 4 months, just the one we saw here, then I'll be taking that. Now we can start the sell program potentially. We can see a start for the sell program after we take the buy stops and then break down lower to take the sell stops. We'll be forming a bearish breaker and then we will start the sell program to attack the slow. Then I'll be interested in taking sells or taking shorts towards the sell side equity. This is another conversation for another teaching, but this is what I'm talking about primarily here. So it's a consolidation environment on in DAO, and I'm not gonna be part of, and I'm not gonna try to pick a side here. It's pretty much indecisive. I cannot pick a side on where it wants to reach or where it wants to move. All I see is a consolidation, and I cannot bet anything on that. So that's gonna be pretty much it for DAO. Going to Euro USD, here I'm viewing the weekly time frame chart. Euro USD is also known as the fiver. Now you can see here on Euro USD, compared to DXY, it has formed a lower low. DXY has formed a higher high. Keep that in your mind and remember it for the next pair, which is pound USD. So we formed a lower low. You can see that just the wicks are doing the damage. This last wick is just retraced to the monthly fair value gap. I actually didn't. I forgot to to actually include or attach the monthly time frame chart for USD, but you can go by yourself and check the monthly chart, and you can see how price just traded to the low of the fair value gap or the high of the candle that forms the fair value gap, and then it retraced up higher. So I'm looking at the consequent correction of that discount wick in relative to the consequence rate of the premium wick in the XY. I want to see some support here that can potentially send price up higher above this fair value gap and potentially to this buy side liquidity. So I'm still looking for higher prices here. This is what I'm seeing here on EURUSD, monitoring the constant close with the discount wick, and on the XY the premium wick for potential resistance on the XY and potential support on EURUSD that can potentially send price higher to the buy side liquidity on EURUSD and for lower prices on the XY. So going to the daily time frame, you can see now Pay very close attention to this. We have a lower low here. We formed a low, relative equal lows. We took the lows, filled the monthly fair gap, and now we're retracing up higher. You can see that we traded the refined fair gap, we revisited it, and also the bullish order block. And now we can potentially see price trade up higher to the buy side liquidity here and this buy side liquidity here. That's gonna be pretty much it for Euro USD. Going to Pound USD, also known as the cable. Here I'm giving the weekly time frame chart. You can see that price is just pretty much respecting the constant quotient of that discount wick. And now pay very close attention here. What do we have here? We have a higher low. When you compare that to Euro USD, we have a lower low. When you compare that to TXY, you can rewind the video. You can see that we formed actually a higher high. A higher high in TXY translates or results in lower low in Euro USD and the lower low in Pound USD. But we haven't seen lower lows in Pound USD. We surely did see lower low on Euro USD, but we didn't see the lower low on Pound USD. Now this would be showing me an SMT where Pound USD is refusing and like it's just refusing lower prices, which shows more strength in Pound USD and it wants to reach for higher prices. It wants to reach for this price liquidity. Now also pay one more attention here. Price didn't take out the sell stops here when compared to the Euro USD. Euro USD has take out the sell stops here and reached to the monthly fair gap, but Euro USD or Pound USD haven't taken out the sell stops and didn't reach the monthly fair gap, which shows that the Pound USD is wanting to see higher prices. There's strength, there's underlying strength in the Pound USD, and it wants to reach to higher prices. Now this area here of buy side liquidity, the relative equal highs, I really want to see price attack that relative equal highs and the buy side liquidity here, and potentially this all-time high. This is the major buy side liquidity that I'm looking at right now. So going to the daily time frame, you can see prices just respecting the discount wick of the consecutive Koshmet here. The consecutive Koshmet of the discount wick here, price is respecting it. Even on the daily time frame, you can see pretty much some respect here. Price trade to the bullish propulsion block here 2 times, and now potentially we can see price back up to higher prices. You can see that relative equal highs, very clean highs. The market would never leave them available in the markets and trade down lower. I believe we're going to be attacking those relative equal highs and this buy side liquidity soon, either next week or the week after. So, and one of the signs and the confirmation that's going is one of the confirmation that I've been seeing is this SMT between Pound USD, Euro USD, and DXY. So I'm expecting some kind of strength. I'm expecting that this is gonna be the strong sister in between Euro USD and DXY. This is gonna be showing the most strength in price action, attacking the buy side liquidity and this buy side liquidity. So that's gonna be pretty much it for this week review. I hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.